Well, site selection is the process of examining multiple options and assessing their relative advantages and disadvantages. This week, our monthly Eye on Economic Development segment is launching a 4-part series called Taking a Deeper Dive into Site Selection. We'll kick off the series with an interesting question. Are economic development incentives effective? And to answer that question and more, pleased to be joined as always to welcome back national site selection firm KSM Location Advisors CEO Tim Cook and President Katie Culp. And welcome as always to the program.
Hi, Gary.
To kind of tee this up, you hear a lot about tax abatement and tax increment financing and all kinds of incentives that are used to attract investment, expansions, and those types of things. Can you make a general statement off the top? Are they good? Are they bad? Or is it more complicated than that?
Yeah, I think the short answer is they are good. They are effective tools if used reasonably and responsibly. I think from a micro level, they help deals get done. At a macro level, it's really helped Indiana achieve the reputation they have as a great place to do business.
Yeah, and Katie, I guess it depends in terms of how you look at incentives from administration to administration. Different political parties have different, outlooks on the use of incentives.
Yeah, there's certainly changes and nuances. Some are minor and some are major. You certainly, it's a hot topic to put political campaigns around. I might add a little bit to it and disagree a tiny bit with Tim. I think if incentives could be eliminated everywhere in the country, then maybe they wouldn't be necessary. There are some valid arguments against them in terms of, we'll talk a lot about that today, but I think the fact that they are never going to be eradicated everywhere, and every state and community is going to have some tools in their toolbox to incentivize economic development, you have to participate as long as everybody else is. And so to that extent, I think even those administrations who might not be so gung-ho on incentives, they recognize that. So even when you're a little more conservative about their application, you've still got to play the game somehow.
All right, let's talk about some of the criticisms of incentives to win deals. First of all, the state is picking winners and losers, and the companies receiving the incentives have an unfair advantage.
Yeah, that's just not really what we see in practice. The state does a return on investment calculation on every one of these deals. And at the end of the day, they're trying to figure out, is this a project that we want to try to attract? Every project, has its own fact-sensitive pattern. But at the end of the day, we think they are needed.
The return on investment, as you look from a state standpoint, does that return on investment typically justify the size of the incentives that are being offered?
It has to, or they won't support the project. And I think this is a greater sophistication you've seen. I don't know that 20 years ago when I first got in this business, certainly in Indiana, but I think even across the country, people weren't looking at the analysis so much. But it's a big part of every conversation with every deal we work on.
And so from a state government standpoint, the decision to dole out incentives is a process. They really look at it and look at that return on investment.
Yeah, there's payroll taxes, there's, corporate income taxes, even if it passes through to different types of legal entities. They've got to make sure that all of the other impacts, direct tax revenue and indirect kind of multiplier effect stuff, can justify the use of any sort of performance-based incentives that do come about.
Here's one I've heard on a number of occasions from some folks. Incentives aren't needed because these deals are going to happen anyway.
Yeah. Well, with Indiana, they've got built in their statute with their main incentive that you have to have what's called a but-for test, which means but for the incentives being offered, the project would not happen. And so that's something that Katie and I run into with projects that we do throughout the country, which is you have to have a competitive element to that. If you can't meet that test, then by statute, those incentives can't be offered.
Okay. How about, again, here's another one, and we see some publicity about this, but if a deal that is offered incentives goes bust, the companies don't create the jobs they were going to create, the investment they were going to make, those types of things. What happens to the incentive?
You know, Indiana is great because their programs are structured to be performance-based, and it's smart. I think like Texas many years ago had a close the deal fund that got a lot of attention where they paid the money first and then you performed, and then it gets real messy. You've got to go policing and try to pull back the money. You don't get the benefits here unless you are creating the jobs, making the investment. But in those carrier type of situations that are very visible, there are clawbacks, and you're contractually obligated to pay that back. So they have been smart about the way they're putting money on the table and with the strings attached to it.
And in that case, Indiana is very aggressive in enforcing those
Yes.
clawbacks.
Yeah.
So when
Would you
companies-
assess Indiana compared to some other states in terms of those clawbacks, that they're pretty aggressive in terms of policing that?
Yeah, I mean, I think Indiana's as aggressive as any state in the country when it comes to, we've got a contract in place. If a company leaves the state, we're going to try to take back those incentives. I think they are
Totally agree.
at the top of the list.
Yeah.
Yeah. Where do we go? Big picture. What do you think the key is to ensuring incentives don't run into some of these pitfalls and they are used appropriately going forward?
I think the key is going to be, do you have a state agency that's monitoring it? Do you have reporting? Do you continue to use things like return on investment calculations to make sure that you're using them in the right instances? If you have some of those controls in place, then I think you can avoid a lot of the pitfalls.
Yeah, and Katie, I think to your point too, I think what you were saying earlier, in a perfect world, great, we don't need incentives, but that's not the world in which we live.
Yeah, these business decisions, we are not that unique as a state. You know, there are other states that offer a lot of the similar benefits from the whole big picture. And so if we want to win those deals from an Illinois or a Missouri or what have you, we've got to be able to play the game.
All right, very good. Interesting commentary on incentives. I know part 2 next month, you're going to be talking about the use of analytics and data in site selection. And I know that's a big issue as well. We'll look forward to that.
Thanks, Gary.
And I'll be right back right after this. Stay with us.